Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Friday, and it's August 26th. I hope you guys got some great upcoming plans for the weekend here. Next weekend will obviously be a nice long weekend, which will be Labor Day weekend. So next week, probably expect to see some conservative numbers here. But today we do got some important data coming in today, so we'll jump right into it. And the first item, of course, is the GDP, or also known as the Gross Domestic Product. This is for the second quarter. So this is our second reading. The final will come in next month. But the first initial reading came in as 1.2%. Forecast was supposed to taper down a little bit to 1.1, and it came in right in line with expectations at 1.1%. So obviously not good news. We're still kind of teetering where the economy is at. Consumer sentiment. So back in July, we had 90.4 reading here, and the forecast is supposed to go up for the month of August, and it actually dipped down to 89.8, and a lot of that's being attributed to confusions as to not real confusion, but for the elections that are coming up, and the debate as to who's going to do the better job for the economy, who's basically drawing the confidence of the consumers for who's going to do the best for the economy, and that's what's kind of bringing the consumer sentiment down a bit. Excuse me. Also, we had the biggest all week for Jackson Hole. So here's some highlights from what she was kind of saying. She does see that the labor movement, the inflation, and where the economy is moving, the GDP is improving enough where it does call for the Fed to be calling rates. Now, it doesn't sound like she's anticipating a September rate hike because it was kind of a dovish hawkish kind of comment, but it could be by end of the year, maybe by December, we might see a rate hike, which, matter of fact, the Fed Funds futures came in lower. So it went from 18% to 15%, and then went from 41% in December to 43%. So they increased it to December's possibility of a rate hike happening. And, of course, she's also saying it's going to be data dependent. So they're going to be looking at data going forward. And one of the items next month will be the jobs numbers for August coming in. So that will be obviously the last big hurdle that might play a factor into a possible rate hike in September is our job numbers coming in for the month of August. So we'll have to kind of wait and see. And that's going to take place around the 22nd of September, around towards the end of the month there when they do when they had their meeting over there as well. So she's feeling a little optimistic where the economy is moving, kind of in line with a lot of economic economists were kind of saying as well. Some of them were feeling a little bit more, because they're kind of seeing Europe not struggling as much. They're kind of seeing, there's some positive news out of China as well. So people don't seem to be in the downhill spiral as they were seeing a few months ago. So let's go ahead and take a look here. Headline news. So as a result, after her speech, a lot of the sideline investors came back into the market. Now, stock market's up. The Dow was up over 100 so far this morning, and it was climbing a bit. And then also, as you can see, the bond here, wow, we dipped below the 50-day moving average. We're way down here, almost halfway down to the 100-day moving average, which would have been a huge drop here. And we had some pretty big swings here. Right now, we're just about 6 basis points from where we left off yesterday. So, depending on when the lender came in with pricing, we could have been worse to better pricing. So we got to see where we can end up here. Hopefully we end up, stay above here and we can keep in this range here and see the nicer rates that we're seeing before, earlier in the late last month. So hopefully we can get back into that range and stay up there and maybe even climb up a little bit further. Also, I almost forgot to mention, she mentioned that they're going to start focusing at, in case there's another recession, as to what they're going to put in the toolkit. And in that toolkit, she didn't really say anything about negative interest rates, but she did say that they're going to probably be doing some expanding their purchases from, their asset classes. So there might be a few different asset classes they might be purchasing. So they're going to explore into that area in case that comes up again, where they might have to do, where they might be able to have to do quantitative easing again in the future if we go into a recessionary cycle again. So that was another thing she didn't mention. So rates, I would say, are about the same where we left off yesterday for the most part, at least currently. We are getting some big swings here and there. A lot of it's going to be dependent on the stock market and where people are feeling, especially those investors who are sidelined, where they want to put their money, if they want to go more conservative route, if they want to go try to get a little bit more on the equities markets. As equities are pretty built up, especially with the basic free discretionary money that since interest rates been so low, that's why equities kind of built up. So when the Fed starts raising rates, that's going to probably drop down a bit. All right, folks. Hey, you guys have a great weekend. Thanks so much for watching. I hope this was helpful for you guys, and we'll look forward to see you guys on Monday. Take care. Bye-bye.